Yo, yo, yo. Welcome back to the channel. So just so you know, yesterday I said that I posted the YouTube video. I also posted it on Twitter. Make sure you follow me over there at David Marino Jr. And when I posted it there, I said that I would say yo for every retweet that it gets. And I received 78 retweets. So that means that I have to say yo 78 times before this video is over. We are currently at 5. And so yeah, yo, let's get into it. So yesterday, what we said we were expecting was, well, obviously the title of the video was, does that count, video? Yo, yo, yo. That doesn't count, but those last ones do. We said that we were going to see a tweezer top play out here because we saw the tweezer top candlestick pattern play out on the 4-hour chart. And yeah, so you saw like a little bit of a, I guess you could say it's like a bear flag sort of formation happen here overnight. And then obviously you had a big drop off here. And the target areas that we were looking at were the 0.5 Fibonacci and the 707 Fibonacci range. So this is like normally the range that SPY likes to retrace to after you get a confirmed top, which obviously you can't confirm anything or whatever, you know, like it looked like a tweezer top, but it could have been invalidated if you break to a new high. But we had a good feeling that it was, among other things. We also had the ES chart. Looked like it was a good chance of retracing. I think I just got given a yo. Is that correct? Oh, yo. 78. That's a lot. I thought I was gonna get like 15 retweets. So it's not even because the people like me. They just wanted to torture me. But anyway, all right, so now you can see, and I just want to show you guys this because it's a really powerful demonstration of how powerful Fibonacci can be. You know, you go down to lower time frames. Let's zoom this in here so it's easier to see. And you're like, yo. we were looking also, let's just go back to 4-hour for a second. We were looking for the confluence also of this uptrend right here, the thinner green line, and this white downtrend, this thicker white downtrend, as a potential bounce zone because it was correlated with the 0.5 in the way that we had it drawn yesterday. I don't know. Trading view, when you change time frame, sometimes it adjusts the trend lines and makes it a little bit different. Let me try and see if I can correct it. No, whatever. It's not really that big of a deal. Regardless, looking at the confluence of these trends, we were able to, and that 0.5 Fibonacci, we're like, okay, 399.78 is a pretty good zone for a bounce, right? So if you zoom into the 5-minute chart, you can see here that right at that level, I mean, let's see, to the penny, yeah, I mean, to the penny, you can see that you got your bounce right here at 399.78, which was that 0.5 Fibonacci level. You had a big, crazy bounce back up to 402 in the matter of like 20 minutes, it looks like. And then that was also probably an inverse Fibonacci, so we would pull from that top to that bottom there. Or maybe here. It might be a 236 or a 382. I took those off recently. No, not the best. I don't know. But yeah, so let's take this off here. And anyway, not important. So you had that bounce happen, and then you come back down here, and now you're getting a bounce. You had a bounce at this 618. You're testing this zone. And then basically the logic is if you and really you're just filling this gap down here, by the way. But if you fail this 618 zone and you can correlate that failure with a trend-based failure as well, then it's pretty good reasoning to suggest that you're at some point going to test this 707 Fibonacci. Now, let's talk about timelines on that sort of test. what's bullish, what's bearish. I will say that over the course of I gotta say like I gotta say yo a few more times because I gotta catch up. Yo, 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 yo. Yo, 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 yo. Okay, 25. I need 50 more. What did I say? 78. Okay. Oh, look, this white trend is what was messing it up. All right, let's go back now. You're gonna see the correlation because I looked at it earlier and it was like perfect, and so I was like, why is it messed up? It's because TradingView just does not like the trends to be consistent across time frames. They would prefer that you have to redo them every single time that you try to use them. No, it's even worse. I don't know, dude. Like, yo, if you're watching the channel, you know what it is, yeah. All right. Anyway, sorry. Oh god, it's so cringy. I can't believe I chose to do this. All right. So overall, again, I'm gonna say this for the 1,000th time. I've been saying it pretty much since December that the structure is overall distributive. Okay, and the reason that I think that is because generally speaking, over the course of the past few months, price has had the tendency to hang relatively high, okay, within trading ranges, and even on these climbs up, you're having this kind of overarching sort of, we call them McDonald arches. They're not a sponsor of the video, and this high arching kind of carrying price, holding price high, is meant to entice the average retail trader or investor into thinking that price is more likely to go up, okay? Because if price, most people aren't looking at TradingView charts and are not looking at technical analysis and momentum and structures and patterns and things like that. Maybe I mean, probably not most in any scenario, but some have maybe some knowledge of this, but they're not really watching YouTube videos about it and educating themselves regularly and practicing and things like that, right? So a lot of times it's just easier for them to look at their Robinhood or whatever app and it says the price and they just know, oh, well, SPY has been above $390 for a long time relatively lately. So that means that it's, even though it goes down, I can buy the dip. It's probably going to go back up. And these, I'm just giving examples. And then once you broke through that 390, you had this accumulative structure develop here. And this is when that same person is kind of looking like, oh, we're back down at 380. That's not really strong because it was just, $415 a few weeks ago. And so that means that it's probably going to keep going down. And so the price hangs relatively low while institutions accumulate in order to later distribute, but sometimes they will reaccumulate and then distribute again, reaccumulate and distribute again. But generally speaking, what I'm saying is the overall trend since like November, and really even back here in October, you can see, has been this more, high arch, hanging price higher than relatively normal in an effort to offload shares, in my opinion. Now, you could make the case that back here, that's not necessarily the case, and you're actually more accumulative back here. And so this could be a temporary, yo, that was funny, distributive action on a lower time frame in order to then reaccumulate and then press price even higher. So I'm not necessarily saying that you cannot see higher highs in this local range. I am saying that right now I feel that it is the relatively less likely thing to occur, if that makes sense, right? I will change my mind once this trend is broken, this red trend that I just drew here, because that would be basically a shift in that trend, and then so you're most likely to test above this level and perhaps go back up to this liquidity zone right up here around $430. Okay. For the time being, again, archiness I saw somebody post today on Twitter that, this is starting to look like it could be like a head and shoulders sort of thing, which I'm not a big fan of the head and shoulders pattern. However, to me, head and shoulders is just a version of distribution. And so you could make the case that, this is like a pattern version of that distributive structure. A head and shoulders isn't confirmed, however, until you break the neckline. Which in this scenario would be $375. Do you really want to wait until $375 to be able to determine, or even if I'm being favorable, $378? I would say that this does look structurally like something that could occur, but you're not trading that as a head and shoulders. You perhaps are trading the larger range as a head and shoulders, but that determination would be done once you break through this level here, and then you're most likely to make your way back down here, which is what I've been saying for weeks without even mentioning the words head and shoulders. Like, yo, 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 yo. I'm just playing by the rules. And right now you can actually see that we're breaking our way down to the 707. We did say that we thought that it is most likely that you're going to hold this 0.5 to 707 range for the time being. I do think that you're going to make your way down here, though. And probably just kind of mess around here for a little while before you come back up here to retest. And the way that we would determine what that retest is going to look like, oh my goodness, why has TradingView's really been doing that a lot lately, where I'm going to take this fib off for now, where it just like automatically double clicks for me. No other app does that. Then we would be looking to this 401.98 to 404.26 range. And you could look like this if you wanted it to, where it pops up to that 0.5, come back and retest this trend again, boom, and then you test the 707. At that time, you would basically be saying, okay, we want to see if it can break this downtrend. Okay, so like that's just an example of how you can sort of project market structure ahead of time. I do not expect that you're going to have a lot of volatility, like a ton of volatility, like as in swings above 402 for the time being until maybe towards the end of the month. I think that you're actually going to be relatively sideways in a reaccumulative action, and then you're going to test up here to see if there's demand. If there's demand, you're going to break this trend and probably go up here to 410.28. I would imagine that that's probably a 707 or a 0.5 off of this move. It sure is a 707 on the money. Do you see how this works? Do you see this? I just want you guys to just take a moment and see what I did there. Did you see what happened? If you didn't see what happened, right? So let's go back in time. Yo. Oh, I'm doing good. Yo, I think I cheated one. We're doing good. We only need 14 more. All right. So what we just did there, okay? Just so that we can teach something here. We pulled this fib like this, right, to determine where this sort of bottoming structure could be. We determined that we think that the likelihood is that you're going to trade along this uptrend that we had, right? Then what we thought was going to happen is we were going to test the inverse of this fib, okay? And so you see how yesterday I could have drawn this fib, right? Is that reasonable? So if I assumed, right, if I said, hey, yesterday, in yesterday's video, which I did, I drew this fib. I said, hey, we're probably gonna retrace to this 0.5 to 0.707 range. I could have said, if we do draw down to this 0.707 range, which it looks like we're about to, then I'm expecting an accumulation to occur along this line, because you have a lot of support here now, right? You have the 707, as well as this green support trend that dates all the way back to October. You have a second tap here in just a few days ago in March. and we're expecting you to continue along here. We're not expecting you to just crash right through. Now, if you break through this trend, then all of this is invalidated, okay? But the point is, now you come up here, and this trend line is a bit arbitrary, okay? But we said, okay, you have this kind of like clean rejection candle that you have here. Perhaps it'll correlate, right? Perhaps these moves will correlate, and you'll see on the 23rd of March, perhaps, right? This is just a way that you can try to time things and determine what structure might look like. All of this is kind of noise. What we're looking for is capturing that bigger move anyway, right? We want to me, not financial advice, just me personally, I want to buy along trends like this, have a stop loss below, right? Not hold below, buy along the trend. If it breaks below the trend, let's sit on the sideline and see what happens. Then you hit this apex of this fib and this trend line. And then I said, if you went on to break through this, and I'm looking up here, right? I'm looking up here because this is like an apex. Oh, man. TradingView with this double click thing. You see right there, the apex of those two trends, okay? Then I'm saying, okay, you could in a this is a very bullish situation. It's not like guaranteed to happen, but you could break up here, confirm, and then boom, have a push up here, boom. And then I said, and I'm going to explain why this works in a second too. I said, wouldn't that be something if that was a 707, right? From this whole move. I bet you it is. That's what I said. I pull the fib. Boom. I didn't pre-plan this or anything. It's right there at 1450, right? So why, Dave? That is so stupid. Like, yo, that is so dumb. Like, what? Why are you able to do that? Yo. I didn't say it. You're thinking it. Well, the reason there's okay. In the market, the reason that all of these indicators work in the fashion that they do is because you are constantly in a push and pull, in a fight for liquidity, okay? And so trend lines, as well as fib levels and previous support and resistance, liquidity zones, like this is literally a liquidity zone, like right through here, okay? Are all support and resistance for whales or large institutional traders or institutions themselves, or and so et cetera. And so what happens is, at these trend lines, bears right now are pressing price down, correct? Once they press price down to the 707 in this scenario, I don't know why, okay? I don't know why this particular, it's a 70% retracement pretty much. I don't know why it works so well on this ticker. These things have personalities. I don't really understand that. But they say, hey, maybe the same thing I think, which is, hey, this bearish move, we're getting down to 618. We're going to start offloading our shorts. We're going to start accumulating, right? If we're shorter term swings, if I'm an institution. And because we've seen, we already played the big move, we made a bunch of money on that. So we're going to get out of the market because we just made a shit ton of money on puts and whatever. And we're going to start selling our puts, right? And we're going to start accumulating our shares as well as calls, okay? And so what they do is they start to buy, and then they're testing demand throughout this region, right? You might make a new high here. Oh, it looks like demand's pretty strong here. We're gonna force price back down so that we can buy more, maybe. Boom, buy more. It looks like demand's still strong. Boom, and then they press price up. Okay. Oh, this is an overcomplicated explanation. I need to script a video for this. Basically, this trend line and all trend lines have a historical buyer that set the precedent for that trend line being a trend line. Okay, and that buyer, let's just say it's just this green trend line, okay, is saying price is not going to go below this trend line for now. and they're big enough to cause that price fluctuation. Assuming this isn't all just an algorithm that's like pre-programmed by Joe Biden or something. We're pretending a little bit here, but you get what I'm saying. Composite man, you know who he is. He's everyone. He's everywhere. He buys, protects that line because he knows that there's demand at higher levels that he can offload his shares at a different time, okay? And so until he's going to keep buying here to force that support so that he can offload his shares again at this higher point. And again, he's just going to do the same thing that I just described. He's going to get his long position here, but then he's going to be looking at these fib levels that he sees price turning around at all the time, and he's going to go, okay, now that we've seen this rally occur, I'm going to get out here, okay? Up here, because up here, this is what you need to know. Because up here is the larger whale, okay, this red one, or maybe it's the same whale or whatever. He's doing the same thing back and forth, rinsing and repeating, but he knows that there's supply here, okay? He knows that there's a lot of selling pressure up here, so he's going to get out of the way and then see what the market does, perhaps. Or maybe he's going to do, or maybe he just controls it all. But you get the idea, okay? Basically, and then eventually, maybe he determines, okay, I'm done resisting this line, and I want to see a rally now, okay? So then he buys through here, sees what kind of demand is there. It comes back for a test. He buys the crap out of that and sends it to the moon, and then retail chases him up. Retail can make money, but eventually retail's left holding the bag. That's how this works, okay? It's all psychology. On the retail side. On the institutional side, it's all supply and demand. It's not psychology. Or you see that resistance continue, everybody gets out of their longs, boom, and then you see this sort of structural movement occur, okay? Hopefully that was somewhat of a good explanation of it, and you gain something from that, but this is basically what I'm expecting. This is kind of what I think that the structure will look like. And then obviously you're going to have bounces, and this isn't going to be exactly perfect or whatever. Maybe you bounce here instead, right? And then you get sent down here. And then what happens is you draw your 707. You're going to have to draw it from your fib from back here. And then, you have a bounce here, the 618, or maybe it's this 707 here, or this apex. That's why apexes work so well, is because they have multiple whales, right? Multiple whales have an interest in protecting the line. And then once you break it, they all have an interest in they've shown that they don't want to protect it anymore. And so then supply becomes available, or vice versa. I hope that makes sense. So anyway, if you haven't already, make sure you go to themonthlyMacro.com, get on the email list. I am still working on it. If I have to push it until April, I don't care. I'm going to keep working on it. I want it to be perfect. I've even thought of rebranding, reproducting it or something in some way or whatever. Oh, my goodness. Oh, what did I just do? Well, since we're here, yo. Yo, one more for good luck. I had 78. I did 79. Let me close the counter. Anyway, themonthlyMacro.com. We're going to put that up here. Join the mailing list there. I'll keep you updated there. We're also on Twitter at The Monthly Macro. And it's going to be a newsletter that breaks down the market in a very in-depth way on a very macro scale. So far, I'm going to be honest, I've only really done in-depth SPX, like S&P 500. It's really that deep. I've been working on it for almost 2 weeks now, and that's as far as I've gotten. So it's really crazy, really in-depth stuff. And my plan is to make it the most valuable piece of content that you consume related to the market every single time that you consume it. So make sure that you go there, join the mailing list so you stay updated. And that's pretty much it. This has been an analysis of the SPY. And this is pretty much how I'm feeling. I think that you're in a relative opportunity zone. If you ever break this bigger uptrend that we have down here, I know the chart's a little noisy right now. Let's see. If you ever break this trend, then all of this becomes invalidated. And instead, what I'm expecting is I guess what it would look like what it would look like is boom, and well, more like this, something like that. So if you break the green trend, then I'm not gonna sit here and be like, yeah, like it's still gonna go up here or whatever. That invalidates that entire move in my opinion, and maybe you go back to those levels later or something like that. But that's not what I would be expecting in the short term. I would expect a move like this. So that's pretty much the video, and hopefully you enjoyed. And again, themonthlymacro.com. Follow me on Twitter if you haven't already. If you're watching this on Twitter, subscribe on YouTube, turn the notifications on there. And until next time, peace. Yo, 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 yo. I don't know if you didn't think that I was going to do it, but I did.